Be Wealthy and Smart, episode 887.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the upcoming Robinhood IPO because Robinhood will be offering stock. And there's a lot of controversy over whether people should invest in Robinhood or not. I'm going to share with you an article from CNBC written by Kate Rooney, who I think did a really good job explaining all the pros and cons and what's been going on with this very controversial company. She makes three key points. First, she says Robinhood is one of Silicon Valley's most valuable private companies and is expected to go public in the coming months in a deal that could value the fintech company above $30 billion. Number two, the free trading app is thriving by most standards despite a series of crises this year. And her third key point, some argue the app makes it too easy to trade and turns the investment process into gambling. But Robinhood paints its critics as out of touch and says millennial and Gen Z investors prefer to invest this way. So let's see what her article says. Robinhood's list of recent challenges are hard to count on one hand, yet the popular stock trading app is growing faster than ever and is on track for a multi-billion-dollar IPO in the coming months. In the past year, Robinhood has navigated a congressional grilling, trading outages, and ensuing customer backlash. It has engaged in spats with regulators and two of the most famous investors on the planet, Warren Buffett and Charlie Munger. Still, Robinhood is one of the fastest growing fintech startups and has risen to become one of Silicon Valley's most valuable private unicorns. And it is this year's number one CNBC Disruptor 50 list company. Robinhood is valued at $11.7 billion, with its biggest backers including Sequoia Capital and Andreessen Horowitz, NEA, Kleiner Perkins, and Google parent Alphabet's venture capital arm, GV. Its IPO debut is expected to garner a valuation at least 3 times that amount, sources told CNBC. Ahead of a public offering, the company has added top executives with experience from Google, Facebook, Amazon, and the Securities and Exchange Commission. Kathleen Smith, principal at IPO research and investing firm Renaissance Capital, said her firm has been comparing Robinhood to other brokerage firms such as Charles Schwab, Interactive Brokers, and TradeWeb, as well as analogs such as Social Capital, Lemonade, and Coinbase. With the exception of Coinbase, which has been caught up in the crypto trading following its debut, most of these stocks have traded well year to date despite a pullback in April and May, she said. We expect investors will be interested in this one, including the Robinhood account holders themselves, Smith added. Robinhood may give people investing on the app early access. Last week, the startup said it will give amateur investors access to initial public offering shares. The Menlo Park, California-based company pioneered free stock trading. It was the major catalyst for online brokerage firms slashing commissions, then adjusting to zero commission trades, now a standard in the industry. Robinhood offers equity, cryptocurrency, and options trading, as well as some bank-like cash management products. Through Robinhood, millions of everyday people have the opportunity to participate in our financial markets, Robinhood CEO and co-founder Vlad Tenev told CNBC in an email. We're proud to be opening up access to wealth creation for people previously left behind, and we remain committed to democratizing finance for all. The app was started in 2013 by Tenev, now CEO, and Baiju Bhatt. The duo met at Stanford and went on to start an algorithmic trading company and later a financial software company that worked with major banks. Robinhood, their third startup, was named after the English folklore outlaw who stole money from the rich and gave to the poor, in a nod to the company's motto of democratizing markets. Robinhood built a mobile stock trading platform at seemingly the perfect time, with iPhones and Android devices becoming ubiquitous and making its sleek interface an attractive venue for a mobile-savvy generation. The stock market, meanwhile, has recovered from its pandemic lows and continues its decade-plus bull run. During the pandemic, Robinhood saw record growth along with the rest of the brokerage industry as new investors entered the market. Social media made stocks a form of entertainment for many, while professional sports were on hold, and people had more free time while working from home, as well as stimulus checks to invest for those fortunate enough to not be living on the financial edge. The largest valuation risks in a potential Robinhood IPO include the sustainability of a recent resurgence in trading activity and regulators taking another look at Robinhood's key revenue source of payment for order flow. Robinhood has mastered growing a customer base through non-traditional marketing, but bringing in a flood of first-time investors could also elevate risks related to customer retention amid market volatility if portfolios turn negative, particularly with complex products such as options, leverage, and trading on margin. Michael Wong, Director of Equity Research for the financial services sector at Morningstar, said Robinhood's IPO may be timed to take advantage of the bull market in stocks before it ends and before regulators make any decisions related to payment for order flow, a key revenue source for the company. Wong, however, is less concerned about the retail investing phenomenon being temporary. We may be in a renaissance of retail investor interest in the market that hasn't been seen since the 1990s. However, this resurgence in interest will likely have a happier ending than the tech bubble, Wong said. Outside of a relatively small pocket of stocks, the market as a whole doesn't seem to be significantly overvalued. While overtrading from zero commissions may be a problem, more and younger people becoming interested in their finances should be beneficial in the long run. Some financial watchdogs and market participants worry that it's too entertaining. Massachusetts regulators filed a complaint against Robinhood, accusing it of failing to act in the best interests of its clients and using aggressive tactics to attract inexperienced investors, its use of gamification strategies to manipulate customers, and its failure to prevent frequent outages and disruptions on its trading platform. The world's most famous investor, Warren Buffett, said recently that Robinhood is promoting a gambling-like behavior that has become a very significant part of the casino aspect, the casino group that has joined into the stock market in the last year or year and a half. His longtime Berkshire Hathaway investing partner, Charlie Munger, added that the app has created a culture which encourages as much gambling in stocks by people who have the mindset of racetrack bettors, and called it a dirty way of making money. Robinhood responded to criticism from Buffett and Munger, saying the two insulted a new generation of investors with elitist comments. Part of the pushback from critics stems from Robinhood's business model. In order to offer free trading, Robinhood and the majority of the brokerage industry make money off of payment for order flow. It routes customer trades to high-frequency trading companies such as Virtu and Citadel Securities, which pay Robinhood to execute that trade. Robinhood makes a commission on the back end without charging customers up front. Payment for order flow, in tandem with heightened trading volumes, has played a substantial role in filling the zero commission revenue hole, according to a recent report from Piper Sandler brokerage sector analyst Rich Repetto. A subsequent review he conducted of the first quarter 2021 brokerage regulatory reports shows that payments for order flow hit a record level across the board for electronic brokers. He noted brokerage firms believe payment for order flow is a disclosed, well-vetted, and scrutinized process by regulators and part of providing the best trading experience to retail investors. Robinhood has repeatedly said it gives customers the best price and denies any conflict of interest within the arrangement. SEC Chairman Gary Gensler has said it's something that the agency is paying attention to. A Robinhood spokesperson said the firm is fully transparent in its communications with its customers over its current revenue streams and has improved its best execution processes. Robinhood is dealing with multiple class action lawsuits after trading outages in March 2020. While the Dow was experiencing major moves, some traders were locked out of Robinhood's platform. It has also had to contend with criminals looking to exploit the retail trading boom by selling logins for accounts at Robinhood and other major brokerages, according to security analysts and listings seen by CNBC. A Robinhood spokesperson said the startup had seen instances of accounts targeted by bad actors this year, but hacks did not stem from a breach of Robinhood's systems. Most recently, Robinhood came under fire from lawmakers and some users after it and other brokers restricted the buy side of trades for volatile stocks, such as GameStop, in late January. A handful of Robinhood's clients who couldn't get in touch with customer service during the chaos event drove to the startup's headquarters in California, demanding to speak to a representative and in some cases vandalizing the property, according to police reports. GameStop's stock price had soared in January after traders on Reddit pushed one another to keep doubling down on buying shares, inflicting pain on hedge funds who had taken the other side of the trade by shorting it. Some accused Robinhood of colluding with hedge funds to make sure their losses didn't snowball. Robinhood said it did not shut down trades because of any outside pressure and needed to cap trading due to unprecedented collateral requirements from its clearinghouse. Celebrities, including rapper Ja Rule, were tweeting #DeleteRobinhood. Lawmakers from both major parties criticized Robinhood during these GameStop restrictions. Representative Ro Khanna, Democrat California progressive who represents Silicon Valley, Representative Alexandria Ocasio-Cortez, Democrat New York, and Senators Ted Cruz, Republican of Texas, and Elizabeth Warren, Democrat of Massachusetts, all blasted the company's decision. CEO Vlad Tenev later appeared in front of Congress to answer questions about it in a 5-hour hearing. During that turmoil, Robinhood was experiencing eye-popping user growth. It soared to the top app in the iOS App Store for multiple days during the GameStop frenzy and led the industry in downloads, with 600,000 people downloading the free trading app in a single day, according to JMP Securities. During January, JMP estimated that Robinhood added 3 million users. As a result, venture capital investors rushed to fund Robinhood as it had to come up with billions of dollars to meet capital requirements. Robinhood raised over $3 billion in a matter of days. Robinhood has been well positioned for volatility in the cryptocurrency markets too. Robinhood Crypto has added 3 million customers per month this year. The company reported that in the first quarter of 2021, 9.5 million customers traded crypto on Robinhood Crypto, compared with 1.7 million a year earlier. That part of the business also saw outages as investors poured into Dogecoin. The company has acted recently to smooth out some of the criticism. Robinhood added a support number, beefed up customer service hiring, and increased its margin requirements after a young customer died by suicide and the family sued the company. After 8 years as a private company, Robinhood filed the necessary paperwork in March to go public. Sources have told CNBC it has chosen the NASDAQ as its exchange. It remains on track for an IPO and has built out its executive teams with both Wall Street and Silicon Valley veterans. Robinhood hired Aparna Chennapragada, who spent 12 years at Google leading product, engineering, and design teams, in March. It brought on former SEC Commissioner Dan Gallagher last year as head of legal, and its first chief marketing officer, Christina Smedley, came from Facebook. Robinhood's CFO, Jason Warnick, joined after 2 decades at Amazon, and its chief operating officer, Gretchen Howard, is a former Google executive. End of article. Wow, there's so much in there, much of which I've talked about before. So I'm not going to revisit some of those things, but I will say that one of the main things that you should consider is what the final valuation number is, because if they are going to value this IPO above $30 billion, it would be, again, along with some of the IPOs that have been significantly overvalued, such as Airbnb, Coinbase, etc. This is something that Wall Street can do when they want to raise money. They set a high target when they sense that there's an appetite for the stock, But the problem is they value it at full value. That isn't even the value it's worth today. It's probably the value it would be worth maybe in 3 to 5 years. I think although I believe demand will be high and this could take off strongly on its IPO day, I think you'll be able to buy shares selling at a discount to their IPO price. But it might take some time to get there. I don't know exactly how soon that would happen, but I suspect that being fully valued at these kinds of valuations, it will definitely get to a more realistic valuation over time. And that's when it might be more attractive to purchase. At least it would be to me. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And as a follow-up to our review contest that we had, last time I announced winners, but what I realized is that the day prior to the deadline, we had about 12 people come in and write reviews, which then get put on hold for a day. So those 12 people, I wasn't able to see your review or know that you wrote a review until the day after the contest was already over. So what I'd like to do is I'd like to give all 12 of you who left a review on that last day a copy of the Wealth Heirs book. If that's something you'd like and you left a review, you're one of the 12 reviewers. And let me just review the names of the people. So that is Stacy Joe, 85, A. Simile, TNMEJIA, 88, Monrose, 38, Julie Jaden, LC, 757, L1NA, 13, MO, 19121995, FJLKFC, Troy L, TZZ11, and Kristen from SoCal. Those 12 people wrote a review on the last day. I wasn't able to put your name in the drawing because of the delay on Apple Podcasts. So all of you, I'm going to send a Wealth Heiress book to. If you'd like to collect your winning book, please email me at lpjhome@gmail.com. Tell me which reviewer you are and your address and how you would like me to autograph the book to you, and I will send you a Wealth Heiress book. So again, thank you to everyone who has written reviews. I so appreciate it, and it's my way of saying thank you. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.